Hey everybody, Happy New Year. Good to be with you for our first webcast of 2025. My name is Brent Moores. It's time for Trading Futures. I'm actually not going to be the regular host of this class. I'm sitting in for Ben Watson today, but I'm glad to be with you. We're going to go through futures today. And I know some of you are not as familiar with futures. Some of you are more familiar with futures. And I'm going to try and do something for both of you. What I want to do for those of you not familiar with futures is give you kind of a basic introduction. It's not going to be, I'm not going to cover everything about futures today, but I want to go through a basic introduction to futures. And for those of you who have been around the block a few times, what I want to do is I want to, look through some potential example trades here that we could look at together, and maybe you decide you like them, maybe you decide you don't. That's up to you. Now I'm joined alongside in the chat Barb Armstrong, who's helping me out. I always appreciate Barb, love Barb, and she is a wonderful instructor, so make sure you check out her classes. You can follow her on X. You can follow me on X at Brent Moore CS, at Barb Armstrong CS. Let me just go through the disclosures real quick. Futures and futures option trading involves substantial risk and is not suitable for all investors. Futures accounts are not protected by the SIPC. Futures and futures option trading services provided by Charles Schwab Futures and Forex LLC. Trading privilege is subject to review and approval. Not all clients will qualify. Futures margin, also known as a performance bond, is the amount of money you're required to deposit in your futures account to establish and maintain a futures position. Futures margin is not a loan. And so just realize there are margin requirements with the futures, both initial margin requirements and maintenance margin requirements with futures. And Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money application we're going to be going through is provided for educational purposes only. The information today is for general informational purposes only and should not be considered an individual recommendation or personalized investment advice. And stock ETF and index options are not suitable for all investors. For the sake of simplicity, the examples in this presentation do not take into account consideration commission or other transaction fees. All investing involves risk, including, for some products, more than your initial investments. Stop orders are not a guarantee of execution. Due to the exchange rules based on certain conditions at the time of activation, the exchange may reject or substitute an exchange-designated limit order for the originally triggered market order. There we go. That was a mouthful. And so let's head on over to the Thinkorswim platform here. Here I have it. And what I want to talk about to start is just basic futures. There's a lot of different types of futures. Actually, you know what? I'm going to go to one more slide here before I do that. We're going to look at different futures asset classes to start. And there's a bunch of different asset classes that we can hit up. And today, I'm going to focus probably more on things like index futures, like the S&P 500 futures or Dow Jones Industrial futures or Russell 2000 futures. Those are ways to participate in the futures market. And maybe it's something more familiar to you. A lot of you are market watchers, so indices are one type of futures. I'm not planning on going into currency futures today, but that's that's certainly a possibility of areas you can go to. Interest rates. You want to speculate on interest rates? Well, this is a way to do it. Maybe you're looking at the TNX or something like that. You want to speculate on those? Well, there's futures products there for you. I'm probably less likely to go to that. Here, I may go to some of these energy futures. Natural gas is a commonly traded future. Gasoline and heating oil. Crude oil is an example of one that's a very commonly, very popular contract on crude oil. And there's plenty of others. I'm probably not going to go into some of these today, but in future classes, I'm sure Ben will go into some of these others. Agricultural futures, these are a lot of ones you hear about: corn, soybean futures, hog futures, etc. Okay, so these are the ones I've circled. They're kind of the ones are going to be the ones that we're focusing on here today. So having said that, let's head on over now to the Thinkorswim platform. And what I want to bring up is, let's just look at this ES future. This is the S&P 500 future, okay? And this is a chart, and you can see we've had a little bit of pullback. A lot of times we talk about a Santa Claus rally as the period of time between kind of Christmas time and the first, I don't remember, it's like 2-3 days of the new year. Well, we didn't really have much of a rally so far this year. Maybe a little bit of a bounce today, up about 0.2% today. And so we'll see how that goes. Question in the chat, can we trade options in futures? There are options in futures. We're not going to trade options in futures today at least, but there are options on futures. When you pull up the futures page, you go to the trade page, you'll see options listed down here. Again, we're not going to do that today, but just realize that is a possible way of doing it there. Okay, so good question. But when we're looking at the futures products, remember, here's what we want to do. When we're looking at futures, you can either go long the future or short the future. Long the future means you're taking a bullish position on that future. If I go long the ES or the S&P 500, then I'm expecting it to go up. If I go short, I'm expecting it to go down. So when I do that, there's a certain cost involved. And the cost you can see either on the Analyze tab. If you go to the Analyze tab, let me go to that ES here, and you can see some relevant data right here on this. And I'm going to just kind of point out some of that because this is key important information here. Let me just make my cursor a little bit smaller here. So here's the future. This is the ES future. So this is the S&P 500. What I want you to pay attention to right now is the multiplier, the tick value, and the tick. The tick size is how much this future, what increments this future moves in. Notice the tick size is 0.25 right here. Now look at the price up here. Notice this price for the future as it changes. Notice it doesn't go from 0.00 to 0.01 or 0.17 or anything like that. It goes in quarter point increments. So the last two digits here are either going to be 00, 25, 75, or 50. Okay, so that it jumps in those increments. Not all futures do that, which is why you need to know how to check those out. The minimum tick value is what is going to tell you how much those jump. Sometimes they'll change in penny increments. Sometimes they'll change in less than a penny increment or less than the 100th decimal point increment there. Now, look, every tick, every quarter point in this case is going to mean a change of $12.50 to your bottom line on that for one futures contract. Now, as you see this moving around, a quarter point isn't much. It's moving around, it's bouncing all around quite quickly. Now look what happens if I take this price, the 25-cent increment, and the minimum tick value of $12.50. Look at this. If I were to go and say, hey, every dollar move, so if every tick is 25 cents, a dollar move is 4 ticks. 4 ticks times the tick value of $12.50 gives me a $50 move. And that way, what I can say is, if we had like a $10 move in the underlying, in the ES, say, $10 move in the ES, 10 times 50 would mean 10 times 50 is $500, would mean a $500 move in your portfolio. Okay, $500 more move. Now, a dollar move, to be honest, isn't that much. That's one reason we need to be careful with futures. this could mean a lot of money in a short amount of time. Now, that's great if it goes your way, but if it's going against you, that's not so great. So remember, $50 multiplier on this. So let's go and just take a look at this contract out here. Let's look at the chart here. Let's say the future were to go from the current price, which is 59.36, up to the recent high, which is right here. And we're going to say that high is 6107, 6107. I'm just going to take my calculator out. I'm going to take 6107, the recent high, subtract the current price, 59.36, is a 171 point move. If I multiply that by 50, the multiplier, we already saw that multiplier, that gives me potentially about an $8,550 gain there. Okay, that's $8,550. That sounds great. So, but remember, it could go against us. So let's say we go and we were to set a stop loss on this. And we're going to do this trade, and our expectation here on this one. And if you don't think this is what's going to happen, then you would not do this trade. But I'm looking for a bounce here. I'm going to assume we have some support in this area. Maybe it happens, maybe it doesn't. I'm going to assume this is going to act as support, and I'm going to assume this is going to be my target right here. So that's the calculation I just figured out. That's a 171 point move up times the 50 multiplier is potentially $8,500. But let's put a stop on here. Now remember, stops don't guarantee we're going to get out at that price, but we're going to put that in anyway here. I'm going to go from the low, and I'm going to go an ATR below that stop, but below the low price. Let me just pull up an ATR here. ATR right now is about $78. Okay. So let me go to the low price of today, or 78 points, I should say. The low price of today is 59, let's see, 59.10, 59.10 minus 78 gives me a stop at 58.32. The difference between the current price, 59.39, minus my stop. Again, we're not going to guarantee we're out at that stop, but it's going to give us some idea of kind of initial risk here on this, is 107 points. 107 times 50 is our multiplier, gives me 50 potential loss of 53.50. Okay, does that make sense there? So our potential gain here on this, assuming we get out at our target price, is 85.50. Our potential loss, if assuming we get out at the stop price, is 53.50. So we're not quite at a 2-to-1 reward to risk ratio, but it's definitely in the positive area there. So let's go ahead and place that sample trade here, just as an example trade. Actually, we're not going to place that trade right now, but let me just show you the process of doing that, because I want to show you an alternative that's maybe a little bit of a cheaper alternative for you here in just one sec. If I wanted to place the trade, one way I could do that is I could simply just right-click on the chart. I could buy custom. I'm going long with an OCO bracket. When I pull that up, let me just shrink this down just a little bit so you can see this. Oh, come on. I want to show you this bottom level here. I switched accounts for this, and it is, hold on one quick sec. There we go. Okay, so here's my account right here. Okay, this is for one contract. And so what did we say? This is our entry price right here. Our limit price is the target price. I'm going to make that good till canceled because otherwise it's going to expire at the end of the day here. And I'm going to make this target price 6107 was the price we said, 6107. My stop price, I said, was going to be 58.32. 58.32. That's a stop, and I'm going to make that good till canceled as well. And then if I wanted to send this, I could click on confirm and send, and it's going to give me this information right here. Okay. But there's a problem. And the problem is, for a lot of you, you're going, hey, look, that's a lot of risk. I mean, that's a pretty tight stop, and you were just talking about $5,300 of risk, Brent. That's just too much for me. Well, let's do this. Let me talk to you about an alternative here for this. And that is, there are micro contracts that do essentially the same thing as the ES, and they are going to be 1/10 of the price. And so that's going to be something we're going to look at, and I think it's something Ben will be looking at in this class going forward. So let me show you those in just one sec, but let me mention this as well. When I was figuring out that data for you of the risk and whatnot, I went to the Analyze tab. Okay, I went to the Analyze tab here, and I got that data right here. There is a handy dandy script, folks, that you can use if you'd like to add to your futures charts. You see it right here. It gives me the tick size, the tick value, and the point value. Remember, the point value is what I'm going to multiply per dollar move. So if I have a $100 move, multiply that $100 move times my point value, and that would be $5,000. That would give me the total risk, so to speak, of the trade. So you can use this script if you want, and I'm going to share this script with you here. So let me go to my studies. I'm going to, actually, let me just do this. Let me go here. Let me get rid of that and that. And I'm going to pull this up. I'm going to share this script with you. Share. We're going to call this futures label. Doesn't want the space in there. Futures label. Okay. And what I'm going to do is, for those of you watching in the chat, I'm going to put that script in the chat. This script is not guaranteed for accuracy, by the way, but it can be a handy tool. Remember, always check. You can always check on the Analyze tab like I just showed you. For those of you watching on a recording, let me do this. I'm going to add it to right down here. One sec. I'm going to put it right down here, and I'll read it to you as well. Okay, so that is it's the slash and the exclamation point, BEHQRCXF. It is case sensitive, so the HQCXF are all caps. Okay, those are all caps. So there's that script to do this script here. Now, here's what I want you to see. This is the ES. There are what are called microfutures. Microfutures. And I want you to see the difference between the microfuture and this page. When I look at what's called the MES, let me switch between those. Look at the chart. Did you see the chart change? Look at the graph right here on this. And I want you to see the difference here. Why is that not changing? Come on. I don't know why that is not changing. Okay, here's the ES. There's the graph for the ES. Here's the graph for the MES. It's the same. Basically, they go along in the same direction as one another. So if you're going to be bullish on one, you're going to be bullish on the other. If one's going to go up 10%, the other one's going to go up approximately 10% or down approximately 10%. But notice this. Notice the point value on this one. The point value on this one is $5, not $50. So if I do that same trade, instead of risking $8,500, I'd be risking about $850. Does that sound better to you? Instead of, the risk was $5,300. If instead of risking $5,300, and that's assuming we got out at the stop loss, which is not a guaranteed, it would mean we'd be risking about $530 approximately if we got out at that stop loss. So this is the way that we're going to be looking to trade a lot of futures here, because futures can get pretty pricey if you don't use these micro futures. This is a public list right over here, everyone. Okay. It is not a public list. So, excuse me, it is a public list. So all you need to do is go to your watch list, click over here, go to public, and there is a futures list, and there is a micro futures list. Okay, so you can pull those up if you like. Now, as I do this and I look here, there's more futures contracts than there are micro future contract. Not everything has a futures contract here. Furthermore, what I want you to realize is there is liquidity issues on futures, just as there is on stocks, just as there is on options. You need to pay attention to the liquidity of these. So let me go here and go to, why that is showing, hold on one sec. Oh, screen is off just a little bit here. Let's go to the ES here. Okay, let's look here. When I'm looking at liquidity, what I'm going to be doing here is I'm going to be looking one quick sec. Let me go to the trade page. And I want you to see the volume on this. Here is the current active contract. Here's the current active contract. And the current active contract is about 390, it's moving as we're going, 396,000 contracts going. That's a lot, okay? So that's ES, that's very liquid. But as we look at others, you're gonna find they're not all so liquid. Let's look at another one. Here's gold futures. Gold futures, volume, 81,000. That's still fairly liquid, okay? But as we look at some others, let's look at silver futures. Here's silver futures, 24,000. That is not quite as liquid there. Here's another, this is a different silver futures, 7,000. Let's go on down to corn futures, 33,000. So you see some of these are more liquid and some of these are less liquid than others. Here's rough rice futures, 131, okay? And so I don't know the exact amount, but if you're not in, say, if you don't have like several thousands in the futures, in the volume category, it's probably not going to be liquid enough for you, okay? So in this case, my encouragement is, if you see something like this, you may consider not trading those contracts, okay? So there's a question in the chat, and Barb answered it about the difference between a future and an ETF. Remember, the future, did you see the leverage that we talked about on that future that I talked about before? A relatively small move potentially meant thousands of dollars of gain or loss. It's a much more leveraged product. There's a lot of different differences between a stock or an index or an ETF and a futures contract. But one of them is just this leverage that you need to get used to. So what I want you to do as we look at this is consider the leverage that we're talking about here. So let me go back to that MES future, and then I want to go to another example here. So here we're going to do the same trade, but instead of the point value of $50, I'm going to do it on this MES contract. I'm going to go buy custom with an OCO bracket. I'm going to go here and I'm going to make this a GTC order. The limit price, the sell limit price, is our target price. And my target price was $61.07. Put 61.07 here, 61.07. My stop price is 58.32. I'm going to make that good till canceled as well. This is going long the contract. Remember, we're bullish on this. We want that to go up. We're going to read through this. There is an initial margin requirement on this, and that margin requirement can change. There's a maintenance margin as well. So it's possible that's what we're looking at. So here we have a contract and we just filled on that. And when we see that, you're going to see that listed right here. Here's our micro futures contract. We have a quantity of 1, and you can see that change. Now remember, if this were the full-fledged contract, instead of showing up $16 right now, this would show up $160. So just be aware of that, or approximately at least, okay? And you can see how quickly that moves. Let's look at some other potential trades here for you. These are all example trades, but let's do this. Let me go to something that's not just an index future. Remember, if you are interested in these kind of financial futures, financial index futures, there's the ES, there's like the YM if you're interested, that's the Dow. There's the, say, the NQ, which is going to be the NASDAQ. There's the NASDAQ. There's the RTY, which is the Russell 2000. You can always look over your watch list on the left if you want, or for the micro version of these, you can look in your micro version watch list. But let me do this. One common one that is used is for gas. So I'm going to go to NQ, and let's just look at this. The tick value and the tick size. This one just happens to have the same tick size that we were looking at earlier on that ES contract, but they're not always going to be that way. The tick value is the same, okay? So, excuse me, the tick value is not the same. The tick value is $5 instead of sorry, what was our other tick value? $12.50. So our point value is $20 here on this. But again, that can be quite a bit. This is a $21,000 underlying price, okay? 21,000. So each individual point move is very little. So this can move quite quickly here. So let me do this. Let me go to the MEQ, and now our point value is $2, okay? $2. So let's think about the implications of that. If I'm looking at my chart here, let me go, and I'm just going to clear this out. I'm going to get rid of this and this and this. And we're going to kind of unclutter this chart just a little bit, make this a little bit easier to see. And by the way, if you see the volume down here, that's great. If you want to add the volume and you don't have it, you can always go up to the gear up here, go to the futures tab if you're showing futures, and this is the control switch to show that volume here if you want it. There, you can check it or uncheck it. Now we have the full view, and I'm going to do a kind of a similar trade here, a similar long trade. I'm going to assume in this case that we have this kind of upward trend, that we're hitting some support here, and that my target is going to be right around that $22,000 level. Okay, there's my target on it. How much would that impact our portfolio? Well, I'm going to take the 22,000, I'm going to subtract the current price of 21,400, okay? 21,400. 21,400. Well, obviously that's 600. So I'm going to take that 600. What am I going to multiply that by? I'm going to multiply that by my point value, which is $2. Okay. So that's that'd potentially be, assuming we got in right where we're currently at, and assuming we got out right here, approximately a $1,200 gain on that. But let's do the same thing. Let's do a target price. I'm going to use that ATR. I'm going to go 382 below the current price, and the current price, the low price. The low price is 2112, 211. Wow, this changes so quick. Let me go 21389. I'm just going to stick with that, even though it's going to change on me a little bit. No, I'm sorry, not the current price, the low price. The low price is 21121. 21121. And I'm going $382 below that. So 21121 minus 382 gives me my potential stop at 20,739. The difference between the current price, which is 21398, minus 20739 is equal to $659. 659. Okay. So the 659 points, multiply that times 2, which is the multiplier. And that actually gives me more risk on that than my potential gain. Therefore, what I'm going to do is I'm actually going to reject that trade right now. I don't want to risk more than what my gain is. Remember, when you're trading, I don't have a magic formula for that, but figure out your entry price. Know what your entry price is. Okay? Know your entry price. Know your target price. Know your stop price. Okay? Know your stop price. If the distance between the target price and the entry price is less than the distance between your entry price and your stop price, then a lot of traders are going to say, I'm not going to do that trade. Forget about it. Some traders will actually say, I want twice the distance between the entry price and the target price than what the distance is between the entry price and the stop price. And remember, the stop price doesn't guarantee you're going to get out there, but it's a good kind of measure in terms of trying to keep reward to risk ratios in place there. Okay, so I'm not saying it needs to be 2-to-1, but most, I would say, active traders like to keep that a positive ratio. Let's look at some other potential contracts here as we go through. So I'm going to go to my micro futures contracts. I'm going to scroll down, and let's take a look here at I may go to that back to that in a second. Here's gold. Here's a gold futures contract. Here's our point value is $10 on that. Remember, if you want to convert the micro to the full-fledged contract, just take out the M. /GC would be the full contract here. And right now, if I'm looking at this, what I got is I kind of got that thing going here. So we'll see. Perhaps that's a target for us there. Let's keep looking at some others. Here's silver. Here is copper. So here's what I'm going to do. Let's look at copper futures. And what I want to do is I want to just check the liquidity on these. Let's see what we got here. Our volume's about 4,700. That's a little bit on the thin side on that one. Let's keep on looking. See what else, okay? Let's go to crude. Here's crude oil, okay? Micro CL, so MCL. CL is the full version. MCL is the micro version. Let's check out that liquidity on that. Let me go down here. About 27,000. That's the current contract. By the way, when you're looking at these, the one closest to expiration, 15 days, is more often than not going to be your active contract. When we get very close, it may roll over to the newest one, but and typically you'll have the highest volume there. That's going to be the highest. This is going to be the most liquid contract. That's the one we're going to trade here. Okay. So I don't have an exact value. This is Rams says, what's a good volume on futures? I would say if you're more than 10,000, that's pretty good volume, but there's not just a hard and fast line on that. So this is what I'm going to look at here. I'm going to look at this. I'm going to look at this crude oil future. We've gone up, and here's my assumption on this one, and you may disagree because this is we've been going up fairly strongly here. And if you think this is going to continue to go up, you could go long here up to this, maybe this would be a target price for you. Let me just put this in. Okay, there's a potential target price. Maybe you think this is going to retrace back to where we've been. We've kind of been in this area down here. If you're bullish on this, you may consider a long contract. If you're bearish, maybe you consider a short contract on this. So if I think it's going to come back down to a level that we've been, I'm going to say we're going to drop back down to where our support level is, our old resistance level is here, down to 71.3. What I could do is I could short this contract. And to short the contract, remember, I got to figure out what the potential price difference is between those. From 71.3, which is the target, to the current price, which is about 73.3, that's a $2 move. Well, each point is $100. So that'd be approximately a $200 move on this. Now, what if I go ATR above my current price? Well, my current ATR is about 1.58. Okay, about 1.58 is well, actually it's changing. 1.59. If I were to add that on top of the current value and say 1.59 plus current price is 73.37, that gives me a 74.96 stop. 74.96 minus the current price, 73.33, is 163. And multiply that by 2 is, well, not by 2, by 100. That'd be about $163 loss if we got out at our stop. Remember with the short, if I'm going to short future though, what's the potential risk on this? At some point, you'll get a margin call, but what's the potential risk? There's a theoretical unlimited risk on this, okay? Why? Because theoretically, there's no cap to how high this contract could go. This contract could go up and up and up and up. At least on a long contract, the lowest it can go down to is 0. Now, that would be a huge loss, but that's still capped. On the upside, there is no theoretical high price on this contract here. So make sure you have your stops, even though the stops aren't guaranteed on that. So what I'm going to do is I'm going to put this trade in. Just want to demonstrate a short trade here on this. I'm going to put in my target price right down here, which is 71.23, is where I drew my line at. And so if I want to put in a short contract, I would simply right-click on this. I'm going to sell, but I'm going to do a sell custom with an OCO bracket, okay? Here we go. There's this. Let me just shrink this down. So here I'm shorting a micro CL future, micro crude future. I'm selling to enter the trade to my target price. My target price is my limit, is if we go down, it's going to be the lower price here to 71.23, 71.23. My stop price, this is the bad scenario, if it goes up, remember we're banking on this going down, is 74.96. Okay, and that's going to be good to cancel as well. I'm going to confirm and send that. And then I'm going to send that. Okay. All right. So there we go. So that's my trade right there. Okay. We're banking on this going down. This is a micro future, 100 points per dollar move on this. Shows you the leverage. Now that leverage obviously is not going to be as much as if I did the full-fledged contract. Here's the full-fledged contract, $1,000 per point on the full-fledged contracts. So just make sure of that. Now there's just one more thing I want to show you here before I go, and that is this. And that is, I want to show you this page right here and share that with you. This is a page from the Schwab website, and it's a Q&A about futures. This is just kind of meant today to kind of get whet your appetite, so to speak, on futures. But the point of it is that there's a lot more to learn. And then in future weeks, Ben is going to be taking you through some of those. But there's information on futures margin requirements, futures contracts. Remember, and there's an FAQ section here as well, which is what I have right here. And so there's a question in the chat I saw earlier, the hours on futures. What are the trading hours on futures? You can click right here, and it's going to go in, and it's going to go through the trading hours there. So they trade a lot. One of the things that people like about futures is they trade longer than just the normal day futures. But there you go. So what I'm going to do is I'm just going to throw this in the chat here for you. And there's a link in the chat for you to this page right here. But remember, there's a whole bunch of different pages you can look at. Schwab.com/futures. Will get you to the futures page there on that. So make sure you check that out. Today, my concepts I wanted to cover were this: the difference between going long a future and going short a future, how to figure out the point value, what your potential risk is on these trades. That's what my goal was here today. And I shared that script with you earlier to help you figure out that point value on that. How to kind of just give you an example of a trade with a target and a stop, how to go long and short, and the difference between the full-fledged contracts and the micro contracts, and how those micro contracts may be something that fit a little bit better into your risk management, risk tolerance here. So, a happy new year, everybody. Glad you joined me today. Thanks, Barb, for helping me out in the chat here today. And coming up next, we have long verticals and diagonals. That's going to be at 11 o'clock Eastern time. Thanks for joining me. Have a great rest of the day, everybody. Bye-bye.